Now to the stock market. Nigerian equities market closed bullish during the last week as the all-share index appreciated by 6.88% as of Friday, 25th of November 2020. According to the stock market report released by the Nigerian Exchange Group, the benchmark index ASI appreciated by 6.88% from 44,492 recorded in the last week to close at 47,554.34 index points last week. Meanwhile, the market capitalization followed suit to close at 25.902 trillion. Month-to-date performance of the Nigerian stock market rose to a positive 8.47%, while the year-to-date gain rose to 11.33%. Much like the previous week, the financial services industry led the activity chart regarding the volume of shares traded, with around 461.2230 million shares valued at 3.697 billion, traded in 7,653 deals. This contributed 64.81% and 24.10% to the total equity turnover volume and value, respectively. The conglomerates industry followed with 99.881 million shares, worth 139.213 million in 592 deals, while the ICT industry stood in third place with a turnover of 37.953 trillion, worth 7.557 billion in 1,050 deals. To help us look at this week, we have Ambrose Omodion, the Chief Research Officer from Investdata. Good morning, Ambrose. It's nice of you to join us today. How do you do today?
I'm very fine.
Yeah, let's look at the market last week. Amid two major headwinds, let's call them two major heavyweights, the GDP figure and then the increase in interest rate last week. But we saw that the market was firm. What do you say to this?
I've studied in one of the program here that what we saw is that market had factored in the expected macroeconomic data that is hit the market. At the same time, for market to ignore such data, they are so sensitive to the market. But at this point, because market has responded to this kind of hike at the initial stage, that was around May when the first rate was hiked from 11.5 to about 13%. The first time market since then market no dive to almost 3 to 5 months markets were not coming down. That means market has taken care of what is happening around the system, the variation, the naira because of what is happening in the foreign exchange market, the resign naira that is ongoing.
Yes.
And when the GDP also came that yes, we had like almost 3 months, 3 consecutive decline in terms of GDP, first quarter, second quarter, and third quarter of the GDP. Then I saw that since we are still in in a positive one, because a decline is different from when you have recorded two negative positions that confirm as either you are in recession, but now we're seeing a contraction in the GDP. But still, there are some sectors that in that process that still did well that investors are looking at. These are the things that investors just are looking at. And also don't forget that the earnings seasons are around the corner. Like I said, don't forget that time and price is what everybody wants to look at when you're investing. What assets you are having, is it appreciable? Or what product you need to take for you to achieve your target? These are the things that investors are playing around. And also looking at the equity has more kind of, how I put it, a shorter time period for you to achieve a good result if all things being equal, because things can change tomorrow. For that, people are looking at, we can take advantage of those companies that they're having dividend yield that is high. At the same time, the earning performance of this company are also pointed that at the end of the day, they were able to pay good dividend.
Was this why people did not run away and move to the fixed income market?
Yeah. And also, if you look at the fixed income market as we speak, as you just mentioned now, yes, the yield there is also coming up because of rate hike.
Yes.
But I'll tell you that it will take a longer time to make such return on the fixed income market. But why a shorter period for you to make it in these are the balancing players in the market. But one thing that is very important that investors should know that market is going up, which is a good one, giving us good kind of pattern for daily chart and weekly chart. But one thing is very common in all the chart, both weekly and daily, that the volume driving the market is very, very small. But we are seeing fund entering the market as reviewed by the money flow index, that people are entering the market. That have moved from around 50 point to almost 72 point in terms of money flow. That means good fund entering the market. But this is not reflecting in terms of the number of stocks that again. Yes, we see the high cap stock like HL, MTN, Dangote.
That was what's going to take me to my next question.
Yeah, Dangote, the ones pushing the market up. But we need more blue chip stocks, another million cap or low cap stock to also rally in that direction. But one thing that investors know that the earlier rally we saw at the beginning of the year was also as a result of this high cap also moving. And as we speak now, the numbers that came from the high cap are still positive. That means those investors or those PFA that really bought into this earlier, seeing that the price are put by the you saw what happened in Nestle. Nestle closing down below 1,000 to trade around the 960 63 points. Yeah, for me, it's an attractive point for those that know what to do in the market. But these are the things that I believe that those that are sitting on the fence, especially the institutional investors and also others, there's opportunity in the market to come. But I know that the more go closer to the end of the year, by Friday we're entering the last lap of the year, which is December. And you gotta come with another seasonalities that come with that December. Santa Claus rally, and also end of the month, end of the quarter, and end of the year towards the 27th to 31st of December. Or between 15th to 22nd of December, we expect to see Santa Claus rally, all things being equal. But these are the things that I believe that will keep the market in this direction. That's why I said one of my letters that markets eyeing a breakout of 48,000. Now, if market break that, but also from the formation we are seeing on the chart,
yes,
we have to also be very careful. Okay, if you look at this is a weekly chart I'm just trying to show you now. Okay. We're seeing already that the market has formed a double top. And when market form a double top, it tells you that either a break at that point or a freak out. Okay. That freak out means that people start taking profit at this point now. But for those that are also designing, that at this point I can take profit, my position if I make profit, and wait if I will break out to continue this trend. But if reverse, you also want to create an open for you to buy more of that. So that's why at this point, all eyes are on the market today to see if the market to continue on the previous week, strong momentum we saw. If that continue, but I expect that to see a mixed market, being the end towards end of the month, and also at the same time, market reforming on a daily chart, on a weekly chart. These are the things that have to be on the daily chart. It form the same double top. On the weekly chart, we also seeing the same double top. It's a sign that yes, we need to play very careful here, cautious here, because if you see at this point, this is a daily chart. Yes, market have crossed the two strong or psychological line of 20 days moving average and 50, which is fine. Golden cross, agree. But market forming double top here and there tells you that possibility the market will come back or continue the trend is high. This is a daily chart, and the same thing also is happening on a weekly chart. That is why investors should also be very careful. Those investors, because they are long-term investors, they don't concern it much. But we traders that are there to make money, take your profit now. When they pull back, you come back again. That's why chart is very good. But even for the long-term investor and for the short-term, you need to have to combine this price action and the fundamental in the market and the economy.
Now let's look at this week. What are the things that we should now be looking at? What are some of the movers that can shake the market this week?
Yes, we're entering almost the last month of the year. Company that has September as year end, I was expecting that to release the result between now and end of December, especially Vitafoam. Or now the earnings for third quarter for their unaudited account, or expect to see also was impressive one. I believe that that's the place investors to looking at, and also the banking store that I also pull back. For me, it's also a good place to be. But I believe that let's see what the market will be between. As I said, we expect to see a mixed market because we have seen that the chart has given us a double top sign. So that profit taking is on that way, and that means that investors will also play cautiously, let it come down again, because market agrees that there's upside. Because if you're looking at, before I conclude,
understand. Okay.
If you're looking at where the market is going, market has formed already a cup, and this cup tells that from here to here, market have to repeat it on the upper side. That means market will likely to beat out this 52, 54 if all things being equal. Then for me, we have a good the upside potential for the market. Depending on what will come from the election that is around the corner,
that's
at the same time, end of the year seasonality, and also the strength of the final full year return that will come between the first quarter of 2023. I feel that the market has all that will support the uptrend.
That's a very good place to put the stop to the conversation.
Thank you.
Thank you very much, Ambrose Omodi on CRO Invest Data, for being on the show today. Well, still to come, the year 2022 has been quite an eventful one for the tech industry. It could be aptly described as the year of the layoffs, as tech companies have had to downsize massively. We shall be looking at the causes and what this means for the sector in the long term. We'll be right back after this break.